Welcome to RIT's Year-End Accounting Workshop. This course is designed to present the basic financial processes for the end of RIT's fiscal year on June 30th. After completing this course, you should be able to identify the importance of fiscal year-end close processes, use the correct accounting processes for subsequent year income received before June 30th, known as deferred income, current year expenses paid after June 30th, accruals, subsequent year expenses paid before June 30th, prepaids. Identify where to find significant year-end processing dates and who to call for assistance. The importance of fiscal year-end. Year-end closing activities are performed each fiscal year to help provide an accurate and complete set of financial records for the university. Producing accurate and timely financial statements requires adherence to the year-end closing deadlines and processes, the focus of this course, and thorough documentation of accounting transactions, including deferred income, accruals, and prepaids. Balance sheet account reconciliations provide a control to ensure that asset and liability balances are accurate and fully documented at a specific point in time during the fiscal year. It may seem like these tasks are a small portion of your many responsibilities, but your efforts to prepare for fiscal year-end close and your attention to accounting transactions during the fiscal year impact RIT's overall financial statements. RIT prides itself on producing timely and accurate financial statements and has historically received clean audit opinions free of findings. The financial statements provide stakeholders such as donors, sponsoring agencies, including federal and state governments and private foundations, parents, students, etc., a view into the fiscal health of the university. We have achieved this standard of excellence in financial reporting through the hard work of the RIT community, including you, which is why we are providing this information. Accurate accounting transactions are a critical part of this process. But the other important part is our established control environment, which is essential to mitigate risk of errors in financial reports and prevents fraud during the fiscal year. Our processes and reporting systems help protect each individual and the organization as a whole. While the risk for fraud exists in all organizations, the management team and external auditors have found that RIT's internal controls over accounting transactions and financial reporting are strong. You are part of that. Let's look at a simple timeline of the fiscal year-end closing process. As you know, the fiscal year ends on June 30th. The Controller's Office performs a series of closes prior to the issuance of the university's financial statements. Accounts payable and accounts receivable close early July. A preliminary general ledger close is conducted in the beginning of July. This is followed by the final general ledger closing sometime in the middle of July. The exact dates for year-end closing deadlines change from year to year, so be sure to go to the Controller's Office website to download the current year's closing timeline. At the completion of the fiscal year financial closings, RIT engages an independent public accounting firm to perform an audit of RIT's financial information and opine whether they have reasonable assurance that the university's financial statements are free from material misstatement. The independent auditors typically arrive in mid-August to begin the year-end audit procedures. The audit continues for 3 to 4 weeks. During this time, RIT's accounting department and/or external auditors may ask departments for additional information. All departments should maintain backup of financial transactions and other documentation to be prepared for questions that may arise. Upon completion of the audit, financial statements are ready for presentation to and approval of the RIT Board of Trustees. A quick note about terminology used in this course. We refer to the current year that is ending, FY19, as fiscal year X1 or FYX1. The upcoming fiscal year, FY20, is referred to as fiscal year X2 or FYX2. Accrual-based accounting. What is accrual-based accounting? Accrual-based accounting is recognizing the economic event at the time the transaction occurs rather than when cash is exchanged. This affects the following financial transactions and events: accounts receivable and/or deferred income, purchase orders, invoice payment forms, employee expense reimbursements, procurement card transactions, payroll and benefits, and prepaid expenses. The RIT financial statements are prepared on the accrual basis of accounting. The information in the rest of this course will assist you in preparing your year-end transactions to ensure compliance with this accounting practice. You can refer to the Controller's Office link in the Resources tab for specific account combinations and examples. For your purposes, it's important to remember that revenues are recognized in the year they are earned. Expenses are recognized in the year the goods are received or services are rendered, not when they were ordered or paid. Accounts receivable. Income for goods or services provided to an organization outside of RIT during FYX1 should be recorded as income by June 30th, even if payment has not been received from the customer yet. Many departments use Oracle Accounts Receivable module to invoice customers. Journal entries are created by the Oracle AR system based on the invoice information you enter. If you are not using Oracle AR when the customer is invoiced, the department is responsible for preparing a journal entry to debit accounts receivable and credit the appropriate income account. Refer to the Controller's Office link in the Resources tab for specific account combinations. Let's look at an example of how accounts receivable is handled at year-end. Let's say Image Permanence Institute provided research testing for the 3M Corporation in May FYX1. When the invoice was sent in May, a journal entry was recorded to debit an accounts receivable account and credit the corporate contracts income account. Then in July, when the payment is received, the Controller's Office staff process the payment, resulting in an entry in Oracle which debits cash and credits the accounts receivable account to clear the receivable account. This process ensures that income is accounted for accurately in the correct period, even though services were rendered in May of FYX1 and the payment was received in July of FYX2. Make sure you use the appropriate account combination for your specific transaction. Refer to the Controller's Office link in the Resources tab for specific account combinations. Deferred income. Deferred income is the term for money received by the university in advance of having earned it. These funds are not yet revenues and cannot be reported in the Statement of Activities. How do we account for deferred income at year-end? We charge it to a deferred income liability account in FYX1, while recording it as income in FYX2 via a journal entry. Let's say that in June FYX1, several alumni made reservations and paid by check to attend the Brick City weekend in October in FYX2. To account for this, the checks would be deposited in June FYX1 and charged to the Deferred Income Liability account for alumni relations. Then in October FYX2, when the event takes place, Alumni Relations will prepare a journal entry to record the income by debiting the Deferred Income Liability account while crediting the Miscellaneous Income account. Note that you would use the appropriate account numbers for your specific transaction. You can find these at the Controller's Office website, which is linked in the resources. Expense accruals. Expense accruals are for services rendered or goods received on or before June 30th FYX1 when invoices are received after June 30th FYX1, but prior to year-end cutoff dates. These expenses are charged to FYX1. If an invoice is not received prior to year-end cutoff dates, use the documentation you have available, such as the quoted price, etc., to support the estimated accrual amount and process an accrual journal entry. Services rendered or goods received on or after July 1st are charged to FYX2. If you have the vendor invoice in hand prior to the year-end processing cutoff dates, submit the invoice to accounts payable as soon as possible. Cutoff dates are found on the Controller's Office website. If goods are delivered directly to your department, be sure to email Central Receiving the supporting documentation, such as a packing slip or invoice, so they may apply the receipt against the purchase order. Send these emails to fmsporeceiver@rit.edu. The ultimate responsibility for receipt and inspection of goods lies with the ordering department. This is the standard process you should perform every time your department receives a good procured on a purchase order. But it's especially crucial that it be done properly at year-end. Accrual transaction processing. Responsibility for accrual transaction processing is shared by RIT departments and accounts payable. Departments with goods on purchase orders received in Oracle on or before June 30th but not invoiced should review their ledger detail to ensure the expense has not already been accrued by procurement services prior to preparing accrual entry. Up through preliminary close, departments will prepare their own year-end accrual journal entries, regardless of dollar amount, for goods or services received on or before June 30th for which the vendor has provided an invoice or you have documentation available to support the estimated accrual amount, such as the quoted price. The department will debit the expense account and credit the accrual liability account as appropriate for their transaction. The department should clearly mark invoices as accrued FYX1 and include the journal entry batch number to avoid duplication of accruals. After preliminary close, up until cutoff dates for final close, departments may continue to prepare accrual entries regardless of dollar amount, again ensuring the invoice is marked accordingly. Departments preparing accrual journal entries must use the year-end accrual category when recording the journal entry in Oracle. This JE category will later be reversed by accounting during fiscal year FYX2. Refer to the Controller's Office link in the Resources tab for specific account combinations and examples. Up through preliminary close, if an invoice is not marked accrued FYX1, next steps will depend on the invoice amount. For invoices of $5,000 or more, accounts payable will verify and accrue the invoice if the department did not. For invoices less than $5,000, accounts payable will not verify that accruals were processed and won't accrue the invoice. After preliminary close and up until cutoff for final close, accounts payable will follow the same process. How do departments handle the documentation for accrual journal entries? Email entry documentation in accordance with Controller's Office journal entry review processes to postmyje@rit.edu, indicating the batch name and JE name. Make sure you have the appropriate approvals and documentation, including the packing slip, invoice, and the date received. Now let's look at an example of accrual transaction processing. Let's assume you have an expense for $200 of office supplies a department received in June, but which were invoiced for in July before year-end cutoff dates. This will be handled in a three-step process by the department, accounts payable, and accounting. First, the department should prepare an entry to debit the department expense account and credit the accrual liability account, being sure to use the year-end accrual JE category. Mark the invoice with accrued FYX1 and the journal entry batch number. Second, the department sends the invoice to accounts payable, marked with accrued FYX1. Accounts payable recognizes that the invoice is accrued for FYX1 and processes it in July for FYX2. Third, after year-end close, accounting processes reversal entries in FYX2 for transactions that were recorded to the Oracle year-end accrual category in FYX1, debiting the respective accrual liability account and crediting the department expense account. As a result, the department expense is accounted for in the proper period FYX1, and there's no impact to the department's expense account in FYX2 for this transaction. Because 3 different departments touched the transaction, it's extremely important that the original accrual journal entry is marked with the Oracle year-end accrual JE category, and the invoice is marked accordingly, or it won't be included in the proper year-end. Purchase orders for goods and services. Departments are responsible for the timely submission of receipt documentation for purchase orders for goods. For purchase orders for goods received prior to June 30th, documentation must be sent to Central Receiving prior to June 30th to ensure reporting is correct. Year-end accounting includes ensuring that all the open POs which have goods received but no vendor invoice applied are accrued for FYX1. To do this, at the end of the fiscal year, Procurement Services runs the uninvoiced receipts report and creates an accrual journal entry and an accrual encumbrance entry for any uninvoiced purchase orders for goods received prior to June 30th. If goods are received by June 30th but not received in Oracle at June 30th, you should follow the process for accrual transaction processing. Purchase orders for services are not received in Oracle. Services follow a two-way match process in Oracle. Let's say you have a service call for your department's Xerox machine prior to June 30th. You have the PO for the service and the invoice from Xerox. Who handles the matching of the purchase order lines to invoice for services? Accounts payable will match the service vendor invoice to the purchase order lines when the department or vendor submits the invoice for payment. If the vendor has not provided an invoice, use documentation you have available to support the estimated accrual amount and process an accrual journal entry. Follow the procedures found in the Accrual Transaction Processing section of this course for services rendered on or before June 30th if vendor invoice has not already been processed by accounts payable. Invoice payment forms. Invoice payment forms, or IPFs, are used for payment of goods or services that are not recorded on a purchase order or paid via the procurement card. What should you do with IPFs at year-end? Submit completed IPFs to accounts payable prior to processing cutoff dates. Follow the procedures described in the Accrual Transaction Processing section of this course if FYX1 IPF is prepared after the IPF processing cutoff date. Travel expense reports. Who handles the accrual of travel expense reports? Accounts payable will accrue travel expense reports. Accounts payable will not split travel expense reports into 2 fiscal years. If more than half of the days of the trip took place in the current fiscal year, the entire travel expense report will be accrued in the current fiscal year. If more than half of the days of the trip occurred in the subsequent fiscal year, the entire travel expense report will be recorded in the subsequent fiscal year. Travel expense reports with the appropriate supervisory approval received by the cutoff date for trips taken prior to July 1st will be included in the preliminary department statements. Procurement card purchases. Who handles accrual accounting for procurement cards at year-end? Accounting will process year-end accrual entries for purchases made on the procurement card prior to June 30th that have not yet processed to the June P-card statement, which have a transaction date of June 30th or prior and a post date of July 1st or later. Be sure to make all updates to account combinations in Active Pay prior to the cutoff date. Be aware that you have a short window to do this. The cutoff date happens monthly, usually 2 business days after month end. Check the year-end schedule and be sure you're aware of the cutoff date and prepared to make your updates in time. If you don't update your account combinations prior to the cutoff date, you're responsible for preparing a journal entry to make the correction. Encumbrances. Unlike accrual transactions, which impact the actual financial results of the university, encumbrances do not. However, encumbrances are important in understanding what requisition costs have not been expended at a point in time. Departments should reconcile and clear encumbrances on a regular basis with a focus on year-end. To do so, you should first, run the Oracle Encumbrance Detail Report through May 31st and compare it to the department statement, looking for balances on purchase orders which will not be expended in the future. Next, email purchase services, purchase@rit.edu, the purchase order number and line in order to final close old purchase orders, essentially canceling the purchase order balance and removing the encumbrance. Any open encumbrances at June 30th will automatically be carried over to the next fiscal year. Payroll and benefit accrual. Payroll and benefit expenses incurred in June but not paid until July are automatically accrued by accounting in the current year. This includes AdPays. The actual payroll expense is posted in FYX2 and accrual is then reversed. This means the effect on the department budget in FYX2 is $0. Payroll will make the entry to record the salaries expense in the appropriate period. How does benefit accrual impact payroll at year-end? Wages earned during the biweekly pay period ending prior to June 30th will be on the current year payroll distribution report. Wages earned during a pay period ending in the subsequent year, but beginning in the current year, will not show on the payroll distribution report for the current year. Any days worked prior to June 30th will be accrued by the payroll department. Prepaid expenses. What is a prepaid expense? It's payment for a good or service in advance of the receipt of that good or service. To account for goods and services that are paid in FYX1 that will be rendered or received in FYX2, start by submitting the invoice to accounts payable for processing indicating FYX2 prepaid expense on IPF or invoice, and adhering to processing cutoff dates. The amount will be processed to a prepaid account in FYX1 and an expense account in FYX2 by accounts payable. If payment previously processed was not recorded to a prepaid account, the department will prepare a journal entry to record the charge to a prepaid account in FYX1. Be sure to use the Prepaid Oracle Journal Entry category. The journal entry reversal is completed by accounting in FYX2 to charge to an expense account. Conference registrations are a good example of this. If someone pays for registration in May, but the conference isn't until September, it's a prepaid conference expense and is charged to a prepaid account in FYX1. Refer to the Controller's Office link in the Resources tab for specific account combinations and examples. What should you do if you prepaid an FYX2 expense using your procurement card? First, prepare a journal entry using the Prepaid Oracle Journal Entry category. Next, debit the appropriate prepaid account with a line description that includes date of event, name of vendor, and invoice number. Then, credit your department expense account. Finally, email approvals and documentation in accordance with the Controller's Office journal entry review processes and cutoff dates to postmyje@rit.edu. Indicate batch name in the subject line. Preferably, procurement cardholders will also indicate in the notes field of active pay transactions that the charge is prepaid and reference the batch number of Oracle Prepaid Journal Entry. Documentation requirements. You've gathered all the required documentation for your department-prepared prepaid accrual and deferred income journal entries. What do you do now? While you should have emailed all applicable documentation as part of your journal entry processes, it's helpful to double-check your documentation. Did you email applicable documentation in accordance with Controller's Office journal entry review processes to postmyje@rit.edu? Did you indicate the batch name in the subject line? Refer to the Controller's Office link in the Resources section for more information on Oracle Journal Entry submission procedures. Applicable documentation must be received by the respective cutoff dates, or the journal entry can't be processed for FYX1. Journal entries which do not require backup will be posted by accounting accordingly. It's important to review your department statement for the month of June after you receive notification from accounting that the close is complete. Tentative closing dates are found on the monthly closing schedule on the Controller's website. If you run statements before this notification, transactions may be missing and cause your statements to be inaccurate. While we complete the close process, it's important to review your June and July statements. If you see transactions posted in the July statement that should have posted in June, review your June statements to ensure an accrual has been processed. If an accrual has not been processed, you'll need to prepare the appropriate entry. Account reconciliations. Balance sheet account reconciliations are prepared to reconcile all balance sheet items, including accounts receivable, inventory, suspense, prepaid, and deferred income. Departments will receive a listing of balance sheet account balances after the preliminary close, as applicable. This allows departments to reconcile these balance sheet accounts to their own department records. Once you have reconciled to department records, prepare any adjusting entries to preliminary balances by the cutoff date in order to be included in the final close for department balances. Email the applicable documentation to postmyje@rit.edu. Reconciliation templates and certifications will be sent for final balances after the final close. How do you conduct your account reconciliations? It depends on the type of balance sheet item. To reconcile accounts receivable, prepare a list of unpaid invoices and corresponding aging buckets. The total of your unpaid invoice list should tie to your general ledger or GL balance. To reconcile your inventory, take a physical count on June 30th and provide details. The total of your inventory count should also tie to your GL balance. To reconcile prepaid expenses, prepare a list of invoices paid for goods and services in FYX1 that show an FYX2 rendered date. The list should tie to your GL balance. To reconcile accrued payables, prepare a list of vendors who will be paid in FYX2 for FYX1 goods or services and show an FYX1 date where rendered or received. This list should tie to the GL balance. To reconcile deferred income, prepare a list of customers who paid RIT in FYX1 for FYX2 goods or services and show an FYX2 date. This list should also, of course, tie to the GL balance. Course conclusion. Let's recap some of the most important things to remember from this course. For accounts receivable, if the service was rendered before June 30th and paid after July 1st, then AR and income is recorded in fiscal year X1 and cash and AR are recorded in fiscal year X2. For deferred income, if cash is received before June 30th but the service is provided after July 1st, then cash and deferred income are recorded in FYX1 and deferred income and miscellaneous income are recorded in FYX2. Finally, keep in mind that the National Technical Institute for the Deaf, or NTID, follows all RIT year-end processes even though their fiscal year-end is September 30th. RIT is committed to governing our community in a way that is both ethical and honest while serving as a role model to our students of honest stewardship. It should be the role of each one of us to safeguard RIT's assets and resources. We have an external anonymous whistleblower system to allow employees to report possible misconduct relative to financial reporting, accounting, internal control, regulatory compliance, and use of institute resources. This concludes our course. Remember, if you have questions about year-end closing processes and procedures, you can find information on the Controller's webpage. The accounting team is also happy to answer your questions to help ensure a successful year-end closing for all of us. Thank you for your time.